In every company, CEO is the first point of contact for the internal and external forces like the stakeholders, shareholders, government, departments, vendors, customer, and the financial institutes. And to lead the company in a profitable way and to grow the company, a CEO must be financially intelligent. And to be financially intelligent, he must knows the finance and accounts as well. But every time this is not the finance guy who is leading the company. Sometimes this is the one who is good in business growth, the one who knows the manufacturing and the business inside, and one who is having the most experience in the company. Therefore, if you are a person heading the company and you are not from a finance background, there are some key insight that you must know to lead the company, because ultimately the performance of a company, an institute, and a CEO is measured in numbers, and numbers is the game that you have to understand. So there are 7 key metrics that if you know, you can be financially intelligent and you can lead the company to a business growth and in a profitable way. Number 1 is the financial statement analysis. If you can understand what is the balance sheet, income statement, cash flow statement, and statement of changes in equity, what they are, what they interpret, and how to understand the bottom lines of these financial statements, you can make a better decisions in terms of key financial aspects. Therefore, try to understand the financial statement and the key ratios that can be interpreted or can be extracted from these financial statements. Number 2 is the working capital management. One must be aware of how to better manage the inventory, receivable, and payables and cash flows. Therefore, you can be able to improve the liquidity and the operational efficiency of a company. Number 3 is the corporate valuation. The ultimate goal of a private business is the wealth creation, and wealth creation is reflected by the valuation of a company, which is ultimately reflected in the wealth of the shareholders. Therefore, a CEO must be aware of what are the corporate valuation methods and how he can assess and enhance the value of his company. Number 4 is the capital budgeting decisions. There are often situations when you have to decide as a CEO that you will make or produce this item in-house or you will outsource this company. Whether you are a manufacturing concern or a service provider, often you have to make a decision of in-house or outsource. In that scenario, you must be aware of the evaluation techniques like the NPV, IRR, and payback period method. This is how you can make a better informed capital allocation decision. Number 5 is the corporate financing decisions. Whenever you need a finance or capital for the future or for expansion, there is a cost to it, whether it is financed by the internally by the shareholders or externally by the lenders. There is a cost, like the costs to the shareholder in terms of interest or dividend is the cost of an internal financing. Similarly, the interest paid to the financer is the cost of external financing. So you must be aware of the cost of internal financing and cost of the external financing. This is how you can make the better decision on the basis of profitability, on the basis of least cost effective method. So if the internal cost is less, go for a increase in the capital and go for a further issuance of shares. If the cost of external financing is less, go to the bank or a leasing company. This is how you can improve the profitability or the cash flow or the distribution of profits to the shareholder. Next one is the financial planning and budgeting. The growth of companies always dependent on how you can compare the past and how you can make a decision for the growth or set a standard or the budget for the next years to come. That is why you must be aware of the forecasting techniques to make a better financial decision for the future growth. And number 7 and the last is you must be able to understand the financial risk. What are the financial risks involved in the transaction, how you can mitigate it so that you can make a better planning for the contingencies. and the items which may come in future which have not been incorporated yet. So these are the 7 key metrics which must be in knowledge of a CEO if he wants to be a financially intelligent CEO. Unless you are financially intelligent, you cannot create the wealth as it has to be. Like, you might be leading the company in a profitable way, but what matter most is whether we are earning the profit as per industry standards or as per the growth of the economy or the region or the sector you are working in. I hope it will cater for the decisions and the information that a CEO must need for making a better financial decisions. If you further need any information on these key matrices, please send a comment to me on this. Thank you very much.